hands up or a heads up? Okay, perfect. I can see there are responses. Okay, so yes, thank you all for being here, and we'll be starting the session now. And before we start, I'll just like to give you a synopsis of what exactly India Charts Strike is before we begin with the session. So, India Charts started in 2001 as a weekly market update and has since expanded to include daily and monthly reports covering commodities, currencies, and stocks. Some updates are now exclusively available on India Charts Insider, a subscriber-only section. The platform focuses on educating people about complete market analysis using technical analysis along with economic and business data as well. So now, if we move forward towards Strike. So, Strike is an all-in-one stock market analysis platform designed to help investors and traders maximize profits. And minimizing risks as well. It provides advanced market insights through proprietary indicators, scanners, and trend analysis as well. Strike is built on the belief that the most powerful technology works seamlessly in the background, making complex finances simple for users. Moving ahead towards our speaker, who needs no introduction, we have already heard to his all wise words, but a few words about him. So Rohit sir is a market veteran and technical analyst with over 3 decades of experience in deeply analyzing market structure and momentum. He is the founder of India Charts and Strike Terminal, which is Strike Money, and an analytical platform designed to bring advanced, accessible market analysis to the Indian traders. His most noticeable contribution to technical analysis is the creation of Rohit Momentum Indicator, that is RMI, developed with over 20 years ago. The RMI is a proprietary tool available exclusively on the Strike platform. It was designed to improve upon classic indicators like MACD by being faster, smoother, and less prone to all the noise that is there. So he has navigated the markets for almost 30 years, has witnessed every major phase of the Indian market, including various scams, bubbles, crashes, and rallies as well. So a market goes through different cycles, as we all know, that is bubbles, crashes, panic, and powerful rallies. Over the last 30 years, Rohit sir has navigated all of them. So today we are going to talk to the creator of the RMI indicator and understand how experienced market professionals, read the market, price, and momentum as well. So let's welcome Rohit sir over here, and we'll hand over the session to Rohit sir from here now.
Thanks, Akshi, and very warm welcome and good morning to everyone on this Sunday. I will start today's session by actually giving you some background on whatever Sakshi has just told you. Partly that we are now a SEBI registered research analyst. So India Charts as a publication is provides not just analysis but recommendations across securities. That is something that we started to do, and we've been on top of it for the last couple of months. So that's one significant part of our journey. But the more significant one over the last couple of years for the people who've joined in today is the introduction of Strike Money. So let me just differentiate one thing up here, that Strike Money is created with a lot of proprietary tools. RMI is just one of them. There is an entire bunch of sentiment indicators that you probably don't find anywhere else. And another powerful one, which I'll be speaking about today in combination with RMI, is going to be the swing indicator. So that is the second thing you will learn. So there are two things we are going to discuss today. And this is, like I said, when people come to Strike, what we are really looking at is people who want to become better traders and investors, being able to do their own timing of the investments or the entry exits on trades themselves. That is the whole purpose. If that is what you're interested in, this is a session for you. And if you want to go one step further and understand how to use the RMI and swing to become, to find multi-bagger returns in options trading on the buy side, something that nobody knows how to do, nobody does, everybody's a failure. SEBI tells you don't trade options. All a bunch of crap because you don't know how to do it. So I'm telling you upfront, people don't know how to buy and sell. People don't know how to time it. That is why you don't make money buying options. according to me, people who sell options are just collecting pennies on the dollar. The really big money is in being able to buy options and time it correctly. Today, you will learn how to do that. And after that, if you don't feel the need to use strike and do that yourself, then you have given up and lost already. So then this is the end of your journey. Second is, this session is not about market क्या लगता है कल निफ्टी किधर जाएगा. Although we look at the setup of RMI, if we are learning it where it is today, but beyond that, if you're looking at Mera stock kaun sa hai, which sector will do well, the session we did yesterday, which was live with subscribers, Weekend with India Charts episode 238, which also included a live Q&A with subscribers, has answered all of those questions. If you want those answers, you can go and watch the WWIC recorded session. But of course, you have to be a subscriber of India Charts Insiders to do that. So today's session would be educational. The purpose is to know how to use the RMI, how to use it on a multi-time frame basis so that you can get proper timing of markets, individual stocks, scanning with a multi-time frame approach. And then we look at what I mentioned is how to trade options on the long side using the swing and RMI. Both are proprietary indicators only available on Strike to make unbelievable returns by buying options. I'm making it very clear. It is unbelievable because you will say, how can it be so simple and how can it be priced at this level? I'll tell you, it will not be priced at this level forever. So once you start using it and you'll make a lot of money, you'll be willing to pay thousands of rupees for using the strike indicator. But right now, you're getting it for a throwaway price because it is still in an early introductory phase as far as I'm concerned. So you're about to get the best gyan that you've ever gotten anywhere on options buying because nobody's ever told you you can make money options buying. And I'm telling you that selling options is the most useless activity you'll ever do if you know how to do buying. So very, very contrarian thought. I'm not saying you can't sell options because, sometimes when you have a large fund and you only want to earn 10-15% returns on your portfolio or on your fund, you can create an option selling kind of strategy to work around it. But in the volatility that you're seeing right now, in the markets, this is exactly when options writers get wiped out, especially if they're using the wrong strategy and if they're not using an indicator like RMI to decide whether they should be selling calls or puts. But if you're selling a combination of calls and puts, ऊपर का भी बेच दो, नीचे का भी बेच दो, पैसा बन जाएगा, then already in the last 1 month, I think a lot of people who've been doing that have already been cleaned out of their bank accounts, and including on the trade deal day, right? When the trade deal was announced on the 2nd of February, right after the union budget, a lot of people got wiped out. A lot of accounts got closed simply because they were caught on the caught naked on option selling. So I call that naked. You're actually taking risk with your pants down and saying that you can kill me whenever you want. But because you haven't seen high volatility almost into decades, you have become complacent about thinking that it is free money. The market is just about waking up and telling people that options writing is not free money. And at least you need to get one thing right, even if you're a writer or you're a buyer, and that is the direction of the market, and for which RMI is probably the best indicator. So let's start by understanding what is the RMI, how it works, and we'll take the entire session from there. I think my discussion, I'm going to try and keep it within an hour so that we can have half an hour for Q&A. So hopefully we end this session by 11:30. That is the timeline that we are looking at. And so I'm going to just take away by sharing my screen. Okay, now it's a very long presentation, but I'm going to focus on just key aspects of it. Essentially, that the RMI to me is something like this. It's just like a sine wave. Okay, why we say that it's a sine wave is that it ends up giving you 1 second. It just ends up giving you the entire picture in a block. Okay. So it just moves up and down between with a central line over here. So sine wave also moves around a zero line up and down, and that's similar to what we want the RMI to do. Because in the end of the day, when I say Rohit Momentum Indicator, what we are actually trying to capture over here is a series of momentum cycles. So when I say momentum cycles, what I'm talking about, and I hope everybody can see my screen because I can't see all the what do you say, Zoom tools on my screen. So,
Yes, sir, we can see your screen.
okay. Yeah, they've actually changed the way it looks. Okay. So when we look at this, so when I'm saying this, this is like a cycle, we all know about cycles. They go up and down, up and down, up and down continuously. And that's exactly what this is doing. Okay. So each cycle, so how do we say that this is a cycle? When does a cycle start and when does it complete? So to understand that, we end up using, the indicator along with uh, an average line. Okay. So when we use the indicator along with an average line, what we actually end up doing is that, let me very quickly set this up, uh, is that you have the main indicator, which is like moving up and down. Okay. Now, any momentum indicator, if you have used, there's always a zero line. Zero simply means that your momentum is zero. Now, let's say momentum, just for the sake of understanding, let's think of it in rate of change terms. So, rate of change of the price of the movement of a price is zero, which means it is going nowhere. That is when it's zero. And when it is going somewhere, it's rising, right? So, we also plot a 9-day average. Now, if you have used any indicator, and I'm sure many of you have used some indicator in the past before, and if you have done that, you know that there's always a red line that follows the main indicator. So in this case, that red line is basically a moving average. So in most indicators, even in MACD or anything, RSI, you often plot a 9-day exponential average of the indicator itself. So RMI is the green one, and there's a red one that you plot along with it, which is a 9-day average of the indicator itself. What is the purpose of this 9-day average of the indicator itself? The purpose is to make it generate buy and sell signals. So every time there's a crossover of green going above the red, that's a buy signal here, buy signal here. When it goes downwards, it's a sell signal and it's a sell signal. So very simple. Like any momentum indicator, you get buy and sell signals. So then why do you use Rohit Momentum Indicator? You could use any momentum indicator. The answer is very simple, that most momentum indicators, one, they may create noise, they are not smooth enough. Two, they may not be applicable to multi-time frames. And three, most important, it is faster. It's faster than MACD by almost 2 days, sometimes 3 days, sometimes. So which means that you can get extremely early signals of entry and exit and get out before things happen, or get in before things happen. And that is where crux of the whole matter is, that you don't miss out on significant moves in the market if you're able to get in or get out early. Okay. And when it becomes applicable on multi time frames, then we are able to combine two time frames to even better strategize. So we look at how we do that using strike, but this basic sense was important, that this generates buy and sell signals. The second thing is importance of this zero line, because when we say that market moves in cycles, then what we are saying is that it must go up and come back down. Okay. And come back down where? It must come back down to zero. So a cycle is only complete when you get a buy signal, it goes all the way up. Some people will say sell signal aa gaya, cycle khatam ho gaya. My answer is no. The cycle is only complete when you come back to zero. Now, this is a new concept. You will not have read it, heard it anywhere. Though there are some people who've written about, momentum crossing zero is when the big move happens, etc. But those are all based on only studying rate of change. But here, what we are trying to understand is the cycle, the entire cycle. Because what happens in reality when you're looking at the underlying prices don't move up and down in cycles. I mean, at least not back to zero, right? A stock doesn't keep coming back, or zero, or whatever that price is. So, for example, let's say a stock is at 10 rupees, it doesn't go up to 50 and then come back to 10 and then come back to 10 again. No, it moves up in trends, right? It moves up, meaning that each time momentum turns up, prices will go up, and then they consolidate. Now, when they consolidate for some time, the rate of change goes back to zero. And that's why the RMI indicator comes right back down. And it's only once it completes the cycle back to zero is when we get a fresh move. And that is why the buy signals that are really relevant when you're using the RMI indicator are the ones that occur after you come back to zero. Okay, I'm just going to do a quick check on something. I just remembered that I usually check this. Hopefully my sound seems to be okay. Just wanted to make sure that it's loud enough. Otherwise, the recording settings go awkward. So anyway, coming back to the main point, that coming back to zero is important. And only after the RMI comes back to zero, when we get a fresh buy signal, is when we say that this is a new move a seriously new move. Because what many times what happens is you get divergences. A price move will continue to go up up, up. Even after it gives a sell signal, prices will fall, it will still go up. And then we say, oh, there is a negative divergence. So we don't say that the trend has really reversed just when this has happened, till we actually get a trend reversal, in terms of price, in terms of breaking some kind of a trend line on average. We don't really say that the trend has changed. Okay, so it's only when you break something. So let's, for simplicity's sake, say that you have a 20-day moving average. Okay, if not a trend line. And when that breaks is when the trend is actually breaking. So while we are looking at the entry on the basis of an RMI, we are not saying that the trend is reversed just because it's giving a sell signal. Sometimes it does. It's a good exit. So you can actually say, okay, if this has happened, should I look for an exit? Yes, look for an exit, look for the next sell signal, look for the next trend breakdown and get out. But that's not a signal to go short or anything. Okay, so that is a different idea. That requires a different view of things. Second thing is what RMI really gives. This is the third one. This is probably a very, very big one for people who find great difficulty in discipline. Why? Because you get FOMO, right? You get fear of missing out when prices are still making one more new high. So you feel like, अरे miss हो गया अभी तो ले लेता हूँ, and most people get trapped at the stop because they feel that they've missed out on the entire move and they should have bought it, and so they end up going and buying it. But what the RMI says is that if you did not buy over here, okay, then you don't buy, 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 you don't buy. Now you buy. You only buy when you get a new cycle of buying after the RMI has completed its entire cycle back to zero. So this is why I call it a cycle, that it has to come back to the zero line before giving you a buy signal. Now it's not necessary that the buy signal has to occur below the zero line. This is a very common question I get. They say that, oh yeah, if this buy signal occurred here, it should occur here. No, that's also not necessary. In fact, when we are drawing the entire picture, okay, sometimes it will happen like this. So now when we actually put the zero line down, right and over here in between, it's possible that you got a buy signal here, it went up, we came back, we touched zero, and now you got a buy signal here. This buy signal is also relevant, this buy signal is also irrelevant. But this buy signal, not relevant. The reason is that here the green did touch zero, here it did not. So this is relevant because we completed the cycle. This is not relevant. It didn't. It is still, this move is still part of the previous cycle. Most probably the trend is not complete. Most probably you didn't break an average or a trend line and the trend is still going on higher. This is a big difference. It makes a huge difference in terms of sticking with the existing trend, not buying into FOMO, not buying at the end of a trend. Yes, it could be that you're still in between a trend and there is more upside, but it's not the starting point of the trend. And the thing I'm trying to identify here is the starting point of any trend is only after cycles are complete. It's a very important concept in using of RMI. Okay, that you use it like this rather than just randomly take any buy or sell signal. Because in the market, nothing happens straightforward. You don't always just get, कि ये है और इधर मेरे को सिग्नल आ जाएगा. ऐसा तो होता नहीं है. Right? What really ends up happening is that, market sometimes give you an indicator, sometimes moves like this. And so when it moves like this, you got a buy signal here, which is nice and clean. But here you have sell, buy, sell, buy, sell, buy. So what do? You end up looking at the underlying price. So let us look at what maybe the underlying price doing. Okay. And what the underlying price throughout this will be doing is higher O, high O, acha O. And then actually it will break down after this last sell signal. So at that point of time, like I said, I will either use a trend line as a confirmation that the trend is breaking, not just the momentum alone. And second is I can also use an average. If not a trend line, use an average. You could use the 20-day average. And when that breaks, so something has to break outside of that, tell you that the price trend is reversing in combination with momentum. And that is our exit signal. So now you know when to buy and when to exit. I've given you both. This is when you buy. This is when you exit. So it's a combination of these two things. Now this whole thing can be turned on its head upside down if you're in a bear market. And today you're in my belief, you're in a bear market. You have to do the exact opposite of this. But to determine whether you're in a bull market or bear market, what do you have to do? You have to know the trend at one higher degree of time. A bear market is nothing but a trend at a higher degree. So, for example, if this is a daily chart, what is a downtrend? A downtrend is the weekly chart is bearish. In other words, the weekly RMI is in sell. So if the weekly RMI is in sell and the daily gives me a sell signal, then it's a bearish trend. If the weekly RMI is in buy and the daily gives me a buy signal, then it's a bullish trend. In short, now we've learned one more concept. That is that you must always trade the trend at one higher degree of time on the lower time frame. So that means that if the higher time frame, let's say this is the higher time frame and this is the lower time frame. So if the higher time frame says sell, on the lower time frame, what do? I do sell when I get a sell signal, and when I get an exit, just the way we discussed, I exit, which means I go above a moving average or I go above a trend line, I exit. Then again, when I get another sell signal from the RMI, I sell. As long as this is still in sell mode, I sell again, I exit again. See, notice something. I'm not saying sell and then buy and then sell and then buy. The larger time frame determines that I'm going to do sell, exit, sell, exit, sell, exit. If it was a buy, what would I do? Buy, exit, buy, exit, buy, exit. That's what I would do. Okay, this is very important. Get it inside your head. Some people feel that they should keep going long and short both sides of the market. The answer is no, and definitely it's a no in a bull market. In a bear market, you get sharp bear market rallies. But when are those sharp bear market rallies going to happen? Not only on RMI, we will use the swing, like which we'll get to later on, to determine those points, because those points are also based on sentiment. When everybody turns bearish, that is when only you will turn bullish also. So it cannot only be based on looking at this, because you'll be buying into a counter trend, which is not what we are suggesting. So what we are suggesting is that you stay with that trend. In a bull market, so definitely it doesn't work, because in a bull market, stocks don't correct. See, in a bear market, what ends up happening is prices fall, sharp bounce, fall again. In a bull market, rise, don't fall, rise again. Okay, sometimes you fall little more, sometimes you fall less, sometimes you hardly fall. It goes up. So trying to short this kind of a sideways range is just a waste of time. And that is why I said the discipline you need is to wait for the RMI to come back to zero when this kind of a consolidation is happening. And when it comes back to zero, then you know that you're at the end of consolidation and the next buy signal is to be taken. Now it's possible that you take the next buy signal और एक और बार ये ऐसे करके चला गया. It's better than getting whipsawed 5 times. Is that okay? You got whipsawed once. Most probably by the end of the cycle, I have seen so many times वो ऐसे ही भाग जाता है. Sometimes you get a whipsaw, sometimes you don't. But the odds of making mistakes or getting bad trades in your system, because of course you will get bad trades. Nothing is going to be 100%. But if you're going to achieve 70%, it has to be by disallowing bad trades, and that can only be done by application of two time frames. So two time frames. One is that tells you that which side of the trade you should be on. So every time you are long, you are doing exit and you're trying to short a rising market. Okay. And opposite of that also, you are trying to short, but not buy a falling market, except when it really gives you that extreme signal of, panic, where maybe there is a trade, for a counter trend bounce, but not otherwise. Okay. And for that, you'll need to use all the sentiment indicators on strike. We don't have time today to cover all of them. Like I said, we'll consider the swing and RMI for option buyers. So that is one that we'll definitely look at, because I want everybody to be able to make money, right? That is the main objective of using strike. So now, how do I apply this using RMI, using strike? Like, this is all nice, but it's a lot of work. Which means if there are 1,000 stocks, I have to find out which ones are buy, which ones are sell, where are the signals coming, what do I do tomorrow How do I find the next idea that, कहाँ पे buy करना है, कहाँ पे sell करना है? A very important question, right? So this very important question is simplified using the scanners on strike. So we developed something known as the RMI scanner, and all of you know RMI is the Rohit Momentum Indicator. And so when we developed the RMI scanner, okay, what we really wanted to do, I'm just expanding my screen. What we really wanted to do over here is uh, allow you to find buy and sell signals based on RMI. Just a second, I'm facing some problem there. Uh, we'll just stick to this. I was trying to expand the screen, just giving some slowing down, but basically what we do here in the RMI scanner, okay, there are a couple of options that you have to choose. One is that we are trying to find stocks which have a combination of buy and sell on different time frames. Exactly what I just told you that, on the higher time frame, you want to be, setting the trend, and the lower time frame, you want to find the signals. So that's exactly what we're going to do using the RMI scanner. What you need to do here though is choose the basket, which means which stocks do you want to run it on. You can choose all stocks, the entire market. You can choose just the Nifty 50 stocks if you want, Nifty 100, 200, 500. Now, in a bullish market, you'd probably choose anyone because you'd choose what you want. If you wanted the 100 stocks, you'd choose that. In a bearish market, you can't really go short on any stock, right? You can only do that in FNO stocks. So that is why you find that FNO basket is chosen over here, because I was essentially scanning and searching for where do I put out short trades, for Indiacharts subscribers. So essentially, I have the FNO basket chosen. The second thing I have here is something known as live and last candle close. What live and last means, simply that live means on today's prices and last candle means on yesterday's prices. Now, why is this option there? See, when we are looking at a buy signal on the daily chart, what does it mean? A buy signal is based on where prices close today. And the closing happens at 3:15 to 3:30. It doesn't happen right now. Sorry. So when prices actually close at 3:15, 3:30, that is when I get a buy signal. So sometimes you might want to know after the market has closed, okay, where are the buy signals today? Now, of course, if you're doing this scan on the same day after 3:30, you keep it in live mode. But if you're doing it next day in the morning at 8 a.m., you want to run it on last candle, right? Yesterday's candles, wherever they closed, okay, we could have said yesterday's bar or whatever, but candle, I think a lot of people understand. It simply means the previous day, basically. So last close, if I just say last close. So on last close means previous day's closing, where were the buy signals or where were the sell signals? So I can choose last day, but I use live mode most of the time. The reason I use live mode is, why do I want to wait for 3:15? I want to know at 2 o'clock itself where the buy sell signals are likely to come. So live mode tells you that in the live market, as of today, at current prices, am I likely to get a buy or sell signal somewhere? And then you have time to execute it at 3:30. Now there's a reason for this, and I'll tell you the reason. When you get a buy and sell signal, so say for example here, Hindalco fell, it's quite a big fall. Ideally, you'd want a reta, but zyada gir gaya, I shouldn't short it here. Maybe you get a bounce, maybe you don't. Okay. But the point is that after that fall, you're getting a sell signal here. Now, do you want to sell it on Monday morning or do you want to sell it on Friday evening itself? Now, there's always a fear that, oh, it's already fallen now, how do I short? But here's a statistic that when you do a back test and you do it over years and years of data, you find that overnight gaps make up for more than half your returns. So at Sharekhan, I used to run a PMS fund known as Nifty. It was based on Nifty. Let me not go into the naming. Essentially, it was modeled around Nifty. So it was a defined model, almost like an automated model. which would give a buy or sell signal on daily closing prices. Now, when I did the back testing for that, okay, when I back tested based on closing prices, today's closing prices, it gives me an X return. So when I remove all costs and everything, it would say CAGR is some 40 plus 45% or something like that. Then I say, okay, there's rollover cost, there's this, there's that. And I say, okay, instead of today's closing price, I mean, I get the signal on today's closing price, I will execute it tomorrow morning's opening price. If I execute it on tomorrow morning's opening price instead of today's closing price, that 45% CAGR dropped to 22% or something. That means almost half of your returns are overnight gaps. Okay, so while it is always possible that, if something's fallen a lot, yes, you ideally want it to bounce and then only sell, etc. But overnight gaps, it's not always that you have a sell signal with such a big candle. Sometimes you just get it with a very small candle. But the main point is that overnight gaps is where most of the returns are made. So we never executed on the next day. We would always execute on the same day before the market closes. And that's a logic that I've brought into here by giving a live mode. So to execute on the same day, you need to know where the signal is coming. So in live mode, you'll know where the signal is coming. You know it by afternoon only. And at 3:30, you just look at it again because are the closing price still there? Is the signal still live? So all you have to check, but you can be very well prepared. You can know which stocks, you can do the analysis on these stocks between, even 12 o'clock in the morning and 3 in the afternoon. So you have hours and hours to look at the daily chart, weekly chart, monthly chart. Yes, I should do it, not I should do it. Should I reject some of them on some basis? And finally come down to those one or two stocks that you want to do. Remember, FNO basket is a basket of 200 stocks. You're only seeing a small list over here. And this small list is only the stocks which gave a new sell signal yesterday. What did we just speak about? We spoke about multi-time frame analysis, which means if the weekly trend is down, only those I should try to short. So what does a weekly trend down mean? Which means that on weekly chart, I clicked out of all. Now I'm going to click only on those which are giving me sell and new sell signals, which means that on weekly charts, I have a sell signal. And then on daily charts, I'm getting a sell. And within over 200 stocks, there are only four. How much work did you save? You saved looking at 250 stocks to decide where the signals are coming. You're down to four. Now, out of these four, you need to decide which one you're going to really take action on. Interesting. You've really reduced your work. You could even look at an hourly chart. You could say, okay, this one is bounced back to the 40 hour or something like that. The risk reward is better. Or maybe not. I mean, sometimes you get it like that, sometimes you don't. Or simply on the daily chart, you have to judge that, okay, this is below the average. So my moving 20-day average could be my closing basis stop loss. And then I can look for, what is the downside target. Now, people who know patterns probably draw patterns like this, and they'll say, okay, if this lower end breaks, then I will short it for the. So you may not do it immediately, but at least you got an idea of where the trade can happen. So you can strategize, you're down to four stocks. You can strategize which of these you like on your setup, on your tools, where to keep the stop loss, what could be the potential target. I use Elliot Wave analysis. You may or may not. On that basis, we sometimes decide that this is wave A, this is wave B. So let's play for wave C. And then we are able to do that because the daily RMI is giving a sell signal. So let's take the risk. That's how we decide. And we're down to just four stocks. So we are able to take that call. So every day you have a new list. Now, here's the difference. Depending on what time period you trade, or if you're a long-term investor. See, right now I've given you weekly with daily combination, which is essentially meant for positional traders. Who's a positional trader? People who are trading the entire daily cycle. Okay, now this is, of course, I've taken a sell example. We could take a buy example, but it's a falling market, so I took a sell, but we'll try that also. So we are looking at key sell signal aega. I want to hold on till it comes back to zero or gives me a trend reversal signal. Okay, somewhere. So when I'm trying to hold on to this sell trade and capture the entire cycle, how much time does this entire thing take? This whole fall, it can take several weeks. I am saying maybe a month or 2 months, like somewhere between that, but a couple of weeks. Okay, so that's what you're trying to capture is one cycle which lasts so much. But now you are a slightly longer trader. You say, Kini, I want to hold on for 6 months. So I want to find stocks on a higher time frame. Okay, and I want to find stocks which I can buy. So now that changes the perspective. You will end up looking for stocks that are in an uptrend on the monthly chart. Okay, so not buy, you look for buy and new buys on the monthly chart. And on the weekly chart, you look for new buy only. Those which are giving me a new buying signal today. Or on the weekly chart simply means on this week's closing. See what this has done. This did touch zero. It went to 0.15 here. Exactly what we discussed some time back. Okay, it touched zero and then it has given a fresh buy signal. So is this a buy? Now, classical guys will even draw a neckline here and say, yes, this is a head and shoulders bottom, etc., etc. Whatever you do, I mean, it could be a small target, it could be a big target. That all depends on the view. But one thing you have is you found a stock that you can buy. Now, essentially, pharma, for those who are already monitoring the market on a day-to-day basis, pharma stocks are outperforming right now. One is as a defensive because money has to go somewhere. All the mutual funds are sitting on cash. खरीदें क्या FMCG भी पिट रहा है, so pharma. The second logic is US has said that we want cheaper drugs in the State of the Union address, making it clear, and that creates optimism for Indian pharma industry because we are the cheapest producers, and therefore generic drugs uh, remain in focus. So that is probably another reason why pharma stocks are doing well in a what looks like a very bad market. So we got one buy signal. We could have gotten, and another buy signal also somewhere. We may get one next week or somewhere. But this is a combination of monthly and weekly means that the time period is longer. Because here, as you see the last cycle also, it starts from here, goes all the way up here, comes down, and that started somewhere in September and went on till January. So it lasted for several months, 3 months, 4 months, 6 months. Like see this buy cycle, it went on for this entire period or more than a year. Okay. So the length of the cycle can vary. This was a small one because it was a small correction. The next one is a long wave. It could go on for months together. Okay. So this allows you to get these early signals on whatever time frame. And I'm using a combination so that I can actually filter out that yes, this is giving me a new buy on what degree. See here on the monthly also, it has come back to zero and now it is giving a fresh buy signal. And the buy signal is coming above zero. Here it came below zero. Both are good signals. The only thing important was green had touched zero or not. It has touched zero, then wherever the buy signal comes, it's a buy signal. Good news here is also it did not break this 40-month average over here. So when you use strike, you get this setup. We call this the Rohit setup, which is essentially the Bollinger Band and averages plotted on top of it. So you don't have to really think unless you want to plot your own averages. You can change, you can create a template and put your own stuff on top of it. But this comes as a standard setup because this is what we use. So now on the standard setup, it didn't break the 40 average. It gave a buy signal on the monthly chart. Okay. And it's giving a new buy signal on the weekly as well. Even monthly is a new buy. So actually it means that new buy on monthly will confirm by the end of the month, but it's on your radar now. Okay. Now some people may say, why wait? Let me go to the daily time frame. Buy aata hai to khareed lete hain. But it's already in buy mode. It's already advanced. So if you go to a lower time frame, when would you want to buy it? When it pulls back, maybe pulls back to the averages like it did over here. So at some point, if this moves up and it pulls back to this, then you want to buy it on that pullback. So that's what you can do. But the stock is in your radar. In terms of how you take action is another completely different subject. But RMI allows you to get on your radar where you should be looking at for taking action. So you can create various types of setups between the different time frames. Like some smart people, once you learn to use it, might say, hey, monthly mein sell or weekly mein buy hai, wo bhi bata do. Which means something which is falling might be bottoming out. So when your mindset becomes that this market has fallen a lot and I want to find a buy signal, everything will be in sell on the monthly. So at that time, you can say, okay, out of monthlies which are in sell, tell me which are coming in buy. Okay. So monthly sell, but weekly buy. That also you can try and choose. It's not coming, right? You're not getting anything right now, but sometimes you will get. So different approaches depending on the state of the market can be set up very easily. And you see how fast we get the results. Just click and go. Okay, that's how we have organized it. On some software, you'll find that moment you do a scanner, you have to wait for 5 seconds for the result to come in front of you. Whereas here, not even 5 seconds, sometimes it's like 2 minutes. I remember I used to do fundamental scanning on Capitaline Ole, very expensive software, couple of lakhs, to take minutes to complete a scan across a basket of stocks. Minutes. or sometimes even more. You have to leave it for 10-15 minutes. Karne do, if you give a slightly more complex calculation. We are going to make sure that that's not the experience. And you can see a lot of these upcoming scans over here on fundamentals and volatility, which will go live eventually for everybody. And those would allow you to actually do things like that, where you can find fundamental ideas very, very quickly based on those scans. But right now the focus is RMI. So what I've just given you is the application of multi-time frame RMI to finding ideas. Today, because the market is in downtrend, I was looking at sells on weekly with daily combination. If you're a short-term trader, you say our market गिर रहा है, बहुत fast गिर रहा है. I'm not finding any new sell ideas, but I want to sell something. What will you do? You'll do the same logic on a still lower time frame. So now for people who have a time frame of 5 to 10 days, ओके, एंड दे वांट टू गो शॉर्ट, व्हाट विल दे से? वीकली में कौन सा सेल है, नया सेल है, सॉरी डेली में, और आर्ली में गिव मी अ न्यू सेल सिग्नल. There I found two ideas, Trent and SBI cards. Now I would look at, which of, and ideally I would want, okay, a stock which has bounced on the daily chart and then is falling, because then my risk reward is good. And on the hourly chart, I would look for, okay, when the stock is close to the averages where my stop loss is not very far, that I would want to take, because the sell signal is coming, but my stop loss should be small and the potential to gain should be a lot more. If it's already fallen a lot and I'm getting this kind of a sell signal, okay, you ignore. But uh, one thing I've ensured over here, that the larger trend is down on the daily chart. So very, very quickly, you can even review multi-time frame. You can say daily पे कैसा लगता है, weekly पे कैसा लगता है, monthly पे कैसा लगता है, just by clicking on this. And then hourly में sell आए, should I trade it here with a stop loss of the hourly here or here? So allows you to take that call very, very quickly. I usually like it कि इतना बड़े fall के बाद, if it bounces, hits the 40 and then starts falling from there, I like to take those trades. But when it starts falling, initially there's no sell signal. It went sideways here, it touched zero, and then it gave a sell. See, I'm looking at everything. It bounced, looks good, touches zero, and then when it gives a sell signal is when it is actually now going into downtrend. And it is still giving you time, because it's doing this buy, sell, buy, sell, buy, sell, giving you time before it accelerates on the downside. So you still have an opportunity. So very quickly, I found two ideas. Now, when you are in live market on hourly, you will find that every hour new ideas will come, because every hour signal is coming, going, and you can keep reviewing. You may not like certain ideas. You may say, sell aa raha hai, but weekly पे अच्छा नहीं लगता, it's fallen too much, I don't want to short it over here. Okay, you can even put on the want. So if some people say RSI पे oversold है, मुझे नहीं short करना है, so RSI indicator लगा दो, just click on FX over here, okay, and you can add the relative strength index. See, I've marked the key indicators here as favorites. You can also make them favorites and add it at the bottom, and that way you will end up seeing that it is oversold. Okay, so very, very interesting way. In fact, see, a couple of things. I was in fact looking at this morning. Is where we are actually getting sell signals, just this month. Okay, now I'm just showing it to you in Metastock. It's easier for me. This is the DJT, Dow Jones Transports. A couple of these other indicators, and I was going to the monthly and saying, yeah, these things have been rising forever. But after probably 5 or 6 months, some of them are falling for the first time when you're getting a sell signal. Okay, either on weekly or a monthly. So here it is. So here you suddenly get a sell, something reverses trend. And that tells you that we have a problem. In fact, I know a lot of people are interested in gold and silver, but you can't really look at all of these on strike. Essentially, strike, what you're looking for is stocks. There are certain stocks which may be just giving sell signals on the monthly, because they've been going up, going up, going up, and you will get that sell signal right now. How about looking for that? Are there any new sell signals on the monthly? Let's remove everything else. Oh, there are many. It's a huge list. Now, of course, we don't have quarterly here. Later, we can add that also. And so it's a long list of monthly sales, but new sales on monthly with weekly is also a pretty extensive list. So a lot of stuff to study. If you put it in combination, how are these happening? And some of them may be happening right from the top. Look at this. Adani Ports, best loved stock, giving a monthly potential sell signal. Weekly, it just gave a sell signal this week. Okay, what does that really mean? Just happened on GSW Steel, right? It's been going on and on and on and on. Now, I did mention to some people, sometimes you can use a trend line on an average if you want a further confirmation, or on classic Dow theory, you want the previous low to break as a confirmation. So you may wait for that. Or if you're looking for, taking quicker action, you will go down to a daily chart, that when the weekly is giving a sell on the daily, am I breaking? Because on the daily, you are starting to make a series of lower highs and lower lows. Okay. So you are getting a trend reversal over here. Okay. Now I'm going to go to the next strategy. I've already explained a lot on RMI. We spent more than, I think, 45 minutes on this. I'm going to take the next 10-15 minutes on a very simple, quick strategy for the option side, but very powerful, and essentially for people who want to buy options, and specifically for Nifty options. Today we will not discuss stock options. We are going to discuss how do you buy options, calls or puts on Nifty using the swing indicator. Okay, so where is the swing indicator? It is under something known as sentiment indicators. If you can't find it, you simply go to the left hand side. Okay, here in the central menu, here it is sentiment indicators. When you click on it, it will open a tab. So that is how Strike is made. It has various tabs. Once you open a tab, it remains open. Even if I shut this window and I open it tomorrow, your personal tabs will be open just like a browser. Okay, so whatever you're using, whatever settings you're using, they will remain. So here I've always have sentiment open, because one of the most unique, important tools in market analysis, especially for timing tops and bottoms faster than anything else, is sentiment. Okay, faster, I mean actually faster than RMI also. Okay, but RMI is useful. Why? Because I still need trend. So what I did is I combined the trend with the swing. The daily swing allows me to capture short-term tops and bottoms in the market. The weekly RMI is what I use to determine the trend. So again, I'm using a multi-time frame approach, just like the one I just described to you. And in a multi-time frame approach, what we do is that whenever the weekly RMI is in sell, on the daily swing, we look for overbought readings to buy puts. Very, very simple. Okay. And similarly, when the weekly RMI is in buy for the Nifty, okay, so I need a Nifty weekly reading. So I have to go to the charts, Nifty charts weekly. So weekly RMI is in buy or sell. It is written on the left hand side. If you can't read the indicator and tell कि buy है, sell है, समझ में नहीं आ रहा है, you simply look at the left hand side, it says sell. And here it says buy. So when it says sell, what are you supposed to do? And when it says buy, what are you supposed to do? So it was in buy from here to here. What are you supposed to do? This is between October and December. Between October, okay, 13th October onwards till 15th of December. Okay, and that's actually till the sell signal came on 22nd of December. Till that point of time, I am supposed to buy every time the swing gives me an oversold reading. So how do I do that? Okay, so let's look at when I would have bought. Daily swing. What did we say? 15th of October. Let's put some vertical lines so we'll remember the dates. And we know when it went into sell also. So 15th of October is somewhere here. And after that, somewhere mid of or late December, somewhere here. This is the buy zone. And after that, it has all been in sell zone. So in buy zone, every time the swing comes down below these two red lines here, which is below 20 and even better below 10. Okay. Below 20, below 10, I want to go long on Nifty. Now, you may say below 10 or below 20. How do we know 20 or 10? The answer is on the bar chart. You wait for prices to stop falling and turn up. Some people, if you use the hourly RMI also, you can use that. So every time you reach oversold, wait for the hourly RMI to give you a buy signal, one entry. Second, you wait for the market to close positive, second entry. So you can actually do two entries. Okay, so if you're buying two lots of Nifty, you can do it that way. It's better. You should not do only one. It's usually ideal that you do three or four lots in a trade, because that allows you to position size into a bottom or a top very nicely. So do have room to actually buy two or three options. Which option will you buy? You will only buy monthly, which means expiring 3-4 weeks away. You will not buy weekly options. अगले हफ्ते का ले लेता हूँ, because when you see this strategy, it's going to be very very tempting. Kare, this is so good. I buy it and tomorrow it goes up. I'll buy weekly options. You will still lose money. I'm telling you out of experience. I did it for 1 year out of greed and I lost money. Okay, so don't do it. पहले ही बोल रहा हूँ. Buy monthly options. Buy a strike which is near the money, which means not more than two strikes away. If Nifty is 25,000, 25,100 चलेगा, 25,200 चलेगा. उससे ज्यादा बाहर मत जाना, which is within 1% basically of price. Okay, so your strikes you should choose is within a percent. Don't go beyond that, because moment you go beyond that, then the odds are going away from you that you might, market sometimes doesn't move more than 2-3% in a month. उसके ऊपर आप 300 रुपए प्रीमियम दे रहे हो, बिकॉज आई एम सेइंग बाय मंथली ऑप्शन. तो 300 रुपए प्रीमियम, 1% आउट, तो 2% तो आपने ऐसे ही दे दिया, तो कमाओगे क्या? So you can't go very, very far out. Okay, so the idea is to buy more time and hope that it plays out in less time. That is when money gets made. So when you buy over here and then it goes up 1, 2, 3, 4, 5, 6 days in a row, your options would have doubled for sure, if not tripled, doubled, depending on how much it moved. And of course, it's going up sooner than the monthly expiry. So here at the start of November, I'm buying November end expiry. But when it moves in 5 days, I don't lose on time value. The fight with buying weekly options is it went up in 5 days, but time value घट गया, बना कुछ नहीं. ओके. और यहाँ पे मंथली लेके डबल हो रहा है, तो आपको प्रॉब्लम क्या है लाइफ में? क्यों लेना है आपको वीकली? इट जस्ट बिकॉज somebody told you 0 का 100 हो गया. छोड़ दो 0 का 100, हर हर महीने डबल करो. Why you want to do 0 to 100 in 1 week and lose all your capital? That is stupidity. That is gambling. Because there you have no view, no tool, no method. Okay, and the writer is smarter. We know that 90% of option buyers, option premiums go to zero. That we know, which means the writer is making money. The writer makes money on time. So how do you fight the writer and make him stupid? Answer: buy time. The only way you can fight the writers who are taking away all the premium is to buy more time, not less time. That is a story that has been told to you to take your premiums away and fill somebody else's pocket. Okay, if you really want to make money buying options and double your money every month, first you need a strategy. I'm giving you a strategy. Practice it before you do it. I said you should have 2-3 lots. You should be at the money and you should buy monthly options. You should not buy weekly options. You do this, if 3 trades may you didn't make money, you come back and say this indicator is useless. Okay. I'm guaranteeing this is a live session. It is going free on YouTube. I'm guaranteeing over here that it will work. But you have to have an exit strategy कि भाई पैसा बना तो book करो. See, in options buying, moment you made 2x also, you need to get out. Okay, so how will you buy this 2x Nifty? You will buy on the swing. You will buy based on what the weekly RMI trend on Nifty is. And when the weekly RMI trend during this period was bullish, every reading down here, if we bought here. If we bought here, sometimes you got a 1 or 2 day pop. Remember, this is a very range bound market. That's why it was only 1 or 2 day pops. In a trending market, you get long moves. Like for example, you see down here, if you bought on this very low swing, you got a very long move. Okay, so sometimes you get long moves, sometimes you don't. You have to decide to book out and take profits every time. You can also use the hourly RMI to do that. So you can enter on the swing, and when the hourly RMI gives a sell signal, okay, or you break the 40-hour average, you can get out. So exit strategies are easy if you actually think about it. Just be rule based. Entry, you have to do it on this, and exit, you do it on that. And entry, do it in 2-3 lots while it is bottoming out and when it gives you the positive reversal. Okay. Now, what happens after this 15th of December? The weekly RMI went into sell and is still in sell today, right? Am I right? It's in sell till today. So what would you be doing on sentiment indicators? From the 15th of December on the daily swing, what would we be doing? Every time the swing gives a high reading, so I think the sell signal actually came on the 22nd over here after this. Okay, so after this, when the weekly gave a sell signal, the first time we got a swing reading up here is here, right at the top. If you actually followed that, imagine you would be buying puts at whatever that level is. And then you ride it the way down. It would again give you that signal here 1 day before the budget. You got this sell off. Of course, you have to book out at some point of time. Like I said, you can use the hourly signals, which would have happened here. On the intraday chart, you would have gotten a hourly RMI trend reversal and you could exit. Once again, you got those signals, you got it here, you got it here. Okay, so you got another sell signal here, which is still ongoing. Okay, now when you have a very sharp fall, you might not get multiple readings at the top. Okay, in those scenarios, we also look at whether prices are not crossing the hourly averages, and whenever you get back to a 70 plus reading, recently I've been saying you can look at short term sell signals over here, but this was the mean one. The mean one was right there at the top. Now, because this is a one-way move, you're not getting multiple, but if you go back and see, there are multiple extremes that you get on the chart from time to time, which end up giving you these important turning points where you actually, buy options. Now, those buying of options would be on long or short, depending on the weekly RMI. So weekly RMI, when I was bullish here, what would you buy? Call options. One or two strikes out. Here, when the weekly RMI is in sell, what do you buy? Put options, one or two strikes out. So when it is over here and the Nifty is 26,300, you buy the 26,000 puts, right? 200, 300 points within 1% out of the money. You could have bought it here and that would have easily doubled or tripled on this fall. Even in just this much fall, if you manage to hold on to it longer, it would have grown even more. Okay. And you could do that based on hourly RMI cycles. Now, some people may say I'm continuously referring to hourly RMI cycle. So before I go to Q&A, now I think the strategy is very clear. If you don't understand it, watch the recording again because it will be live somewhere. And you just go to the Nifty hourly just to give you an insight of how this works. Okay, so say for example, this fall is happening. Okay, when this fall is happening, and I need the indicator also. When this fall is happening out here, what tends to happen is when prices fall, you get multiple RMI cycles on the hourly chart. So for options traders, the daily and hourly RMI combination is important. So here throughout this daily RMI is in sell, and on the hourly you are getting sell, buy, sell, buy, sell. So basically it is telling you can buy some puts here, you ride this entire move, you book it out when your options have made money. After that, or when it gives this buy signal here, you book it out. Again, you wait for the next sell signal. Again, there's another move. You wait. Again, and here you got the swing also at 80 plus. You got the swing also at 80 plus, and after that, the RMI gave a sell signal. You again write this and book out. So you have to you can actually, so when you have a strong trend, and this is what is happening right now also, that when the trend is strong, you may not, we got multiple swing readings at the top here and here, but we may not always get multiple swing readings like we are not getting right now because a war scenario and you're getting a free fall. So in this free fall scenario, how do you really manage around it? The answer again comes back to the hourly RMI. So why now you see the importance of the concept of RMI on this time frame also at a very low time frame for short-term traders is that it gave a sell over here. It came small, little bounce is very small, but the RMI comes back to zero and it gives another sell signal. And it drops again and then it comes back to zero, gives another sell signal, and it's dropped again for an entire week, almost 1,000 points. Almost 1,000 points on this signal. So it's rinse and repeat when you're in this kind of a free range environment. And so in options trading, you can do multiple entry exit. If you're able to, really keep your eye on the hourly RMI, you will be able to do entry exit multiple times in combination with the daily, because throughout this, the daily RMI is in sell mode, isn't it? Let's look at it. What is the daily RMI doing throughout this period? Here it gave a sell and it's just in sell, 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 sell. So there are no multiple signals on the daily RMI. And that is why then when it's, going up and down, we actually look at hourly. Now, during a particular month, say for example, in the start of March, I'm saying buy monthly option. Now, if I at the start of Feb, I bought monthly option, I can hold on to it till the end of the month also. Just looking at the hourly averages, the hourly averages are not crossed, wait till the end of the month. I don't need to keep buying, selling, buying, selling. It's not necessary. Okay, but people who missed out get additional opportunities, or sometimes the fear of bounce is always there because every day there's a news flow. Kal kuch ho gaya, aaj kuch ho gaya. That is where it helps in navigating around that. Okay. So depending on how you want to navigate, you navigate. Sometimes like we saw here, sometimes ek din girta hai, fir bounce ho gaya, and then if you didn't book, you missed out on that. That is where getting out and getting in options becomes a critical factor, making that judgment that, okay, is it falling more or not? I could even put a exit at the average, hourly averages. I could say, okay, it's going to keep falling, but if it crosses the hourly averages, I will get out. How strong your view is, it comes down to that. So but it is using, we are in any case using one of the three things: two time frame RMI and swing indicator to do all of this timing. Okay, so this is essentially what I wanted to teach everybody to do. Swing and RMI are indicators, proprietary, only available on Strike Money. And if you're not a user yet, it's about time that you join in and start using these tools. We will take up questions now for the next 20-30 minutes, and we should be able to conclude by 11:30. And they should be only based on these topics, please. Let's not go outside of that.
Yes, yes, absolutely. So I think let's just give sir a minute to take a break also. In between that, also, everyone, I like to request if you have any questions, you can just raise your hand for a minute. And till then, if there is an exclusive offer for all the participants over here that we have. So hopefully everyone is able to see my screen and there is no problem. So this is an offer for all the participants who have just joined or are listening to Rohit sir since a few minutes. So you get the access to Insiders Club, a research advisory plus strike analytics platform all in one powerful combo for everyone. And firstly, why is this combo powerful? It's high conviction research calls from advisors from in the Insider Club, advanced analytical tools on strike to validate your trades, identify strong trends early with proprietary indicators, options, and FNO insights for better trade setup, scanners and data-driven signals also to spot opportunities faster. So in this combining offer, you get a 6 month strike plus 6 months India charts, all inclusive for 9,999 only. So everyone, you can just go and scan the QR code and go towards the payment, and this would be one of its time and one of its offer as well. So it is exclusive for the first 20 members. So don't waste any time and go towards it. And there are a lot of more benefits as well. So you get expert research plus your own analysis for higher conviction using all the both the platforms that we have over here. So before we move towards the Q&A, if anyone has still not signed up for the applications, go towards the QR code and you can sign up easily and make the payment as well. So yes, now coming back towards the questions. So everyone can, whoever has any question can raise their hand and then we'll moving forward. And as sir has also instructed, keep it towards this topic that sir has now discussed. And later, we will again come back to this screen as well. Okay, so we'll be now taking the questions. Okay, we can see a multiple of questions arising over here. So, okay, I can see Rahit sir. So, please, if you want, you can ask your question. Sir, can we start with the questions now? Will it be
Yeah.
fine? Okay, so I can see there is. So I'll ask you to unmute, please. Yes,
Hi,
Rahit sir.
thank you, Rohit. What today you were telling and teaching, I was trying to do the same thing. Today I got more conviction.
Good.
So I've learned it hard way, learned the Elliot waves on by myself. So I was assuming there might be a sharp fall. There will be fall. So I was sitting on 54,400 OTM when it was rising, and in Bank Nifty I was sitting at 57,000 OTM monthly. So what you today told me gave me more conviction because I was trying to short Godrej properties earlier, but the you know it goes sharp move up in between it gave. So I just want to understand when it gives sharp move up, I know it's the patience which matters in the end because in Nifty and Bank Nifty I've tried that patience is needed in option buying also when it goes move up. But Is there a way to how to handle it? Like I can give overnight hedge when I see prices moving out of Bollinger Band.
So my answer would come back to using the RMI. That is where the answer
Hourly,
lies,
hourly. Okay.
apart from Elliot Wave analysis. So I'm
Hmm.
just going to let me just share my screen 1 second. Yeah, I'm just going to open. Okay. So two things happen here. One is that if you're a Elliott wave analyst, you will notice that it goes down
Yeah.
in 5 waves and then it bounces back in 3 waves.
Right.
And when it bounces back in 3 waves is what we wait for. The other thing which I mentioned, and this is purely based on RMI, which is why it is important, is understanding the cycle. So when this bounce is happening, okay,
Yeah.
the RMI is in buy.
Right.
So, and the RMI is also not come back to zero.
Right.
So even when I'm over here,
Hmm.
the question in the mind is the bounce over?
Okay. Hmm.
The RMI is still here.
Right.
So I say that till it has not gone above zero, I'm not going to sell it again.
Got it. Okay.
So I
And
keep
what?
I keep waiting for it to go up. Now after it has gone above zero here, then we start wondering, okay, now you're at the average, you're at the Bollinger Band. Okay, where do I actually take the sell trade? So then it becomes a little more fine tuning. Sometimes we take it closer to the band, and sometimes you can take it after the RMI gives a sell signal. I say if you have room,
Hmm.
you position size throughout this because you will do one lot, one lot, one lot. And because you cannot time it, sometimes it will fall right from here.
Hmm.
Sometimes it waits a little longer and then falls slowly like it is doing right now.
Right.
That part we cannot predict, the speed part or the time part, how much time something will take. So that is where position sizing, you always feel FOMO, ki, "Arey, gir gaya to miss ho gaya." So you
Right.
do one and then you wait for a further confirmation, a secondary confirmation. So we call that position sizing. So you do one and then you wait for a further confirmation from either the RMI or from lower, lower, lower high to add the second position.
Hmm. Okay. So I will tell you when price was is the green candle at the lower Bollinger Band, the second green candle. That's where I shorted.
Yeah.
Yeah, this, but I couldn't handle this bounce, which came after that because I already bought 1540 ka PE, but
Hmm.
I couldn't handle that bounce at that time when it
From
came.
here to here, na?
No, no,
Hmm.
no. When the Bollinger Band expanded, right side.
Ah.
Yeah.
This,
So,
this,
so at this green candle, I shorted
okay.
because on hourly it was expanding the Bollinger Band. I know it will fail.
Hmm.
So right in the morning, I shorted it.
Okay.
But I couldn't handle this bounce which came up.
Hmm.
It was more like
So
psychological thing.
yeah, so now again here I will push you to an hourly chart since you
Hmm.
spoke of hourly.
Yeah.
Look at the hourly chart of the RMI and this at that point of time also. So what has happened over here is that 1 second. Hmm. So when this bounce happened initially here,
Yeah.
the RMI again same logic. The RMI is in buy. At this point, it is not yet above zero.
Hmm.
So we always wait for this to go back, cross the 0 point, which is here. Now, by the time it is crossing the 0 point, ये इधर भी आ गया.
So
And now
that's
you are
where I
close.
shorted in the morning. The
So
red
then
candle.
what kept you from holding over here? This is
Is
not
this
the morning. Morning is over here.
no
This
this
is 9:15. This is 3 o'clock.
so the next day red candle I shorted. Morning 9:15. Yeah, this one.
So you shorted here. So what is the problem? I didn't understand.
This bounce which came later on to the
This
Bollinger.
one.
Yeah. So
But
more it's
anyway,
more
it is below your cost price.
yeah, I think yeah. So when I saw profit disappearing, so I think yeah,
Yeah, in options that happens because what happens is between here and here,
yeah,
the time aspect is playing a role.
absolutely.
Yeah, that is something. There is no perfect solution. You have to just digest it.
So I was just asking when I see a price opening outside the Bollinger Band at that time, can I hedge it because a bounce may come after that?
No, hedging is fine. You can always hedge, and you
Hmm.
don't have to hedge in options. You don't have to hedge equally. You can do with a smaller quantity.
Okay, okay. I just wanted to understand the psychological part because it will keep happening while it going down.
Yeah. So sometimes, like I was mentioning earlier, sometimes you do get a big bounce also.
Right.
So what do? So one strategy is, the question is, ye fall hua. Did your
Hmm.
option value go up a lot? If it went up a lot, one should consider exiting and re-entering. But
Hmm.
sometimes what if it keeps falling? That will always bother you.
Hmm.
Okay. The answer to that botheration is sometimes exit and re-enter. Now, exiting and re-entering is also a psychological
Absolutely.
handling. Like here, it went above the averages. So here itself, would I get out? Or the RMI gave a buy over here. Should I get out? I
Hmm.
can. The RMI gave a buy over here. I could get out and then re-enter when it gives a sell again.
Got it. Got it. Got it. Got it. Got it. Then just convert it into like mechanical thing. Okay, this is happening now.
Yeah.
I know what is the big trend like. Let's play into it.
Yeah.
Okay. Thank you.
Okay, so let's move to the next question. So, Bhavya Gupta, what would be your question? I'll just unmute.
Hello, sir. It was a great session to attend. I just have a small question that in case of options trading, if we go to if we combine the daily and hourly time frame, then how one could decide the stop loss for the trade? Could I be dependent upon the RMI indicator for the stop loss or any indicators like Bollinger Bands or 40 moving averages? So,
No, so usually it is near the high. So for example, when I get this sell signal,
right.
okay, before this sell signal, what is the highest point where I'd gone to, which is here?
Okay.
So I will usually put my stop loss maybe a rupee or so. I don't put it exactly at the high. So
Right.
it's
Right.
like this is 1756. I will say, okay, put it at 1760 or 1770.
Okay.
1770 better because this is 17
Right.
is a very big number. It's a
Okay.
1700. If it was a 200 rupee price, I will say 2 rupee और ऊपर कर दो, just 2
Huh.
rupees above the high,
Right.
just to allow for some variation, not to get
Right.
unnecessarily stopped out. So
Right.
here also, when I get this sell signal, this is the high we reached, we put it slightly above that.
Okay, so whatever the swing high or lows that they are making,
Yeah,
accordingly, I'll put the stop loss for
yeah,
the trade.
yeah.
And sir, just one more question. Like, we are facing a lot of volatility in the options buying. You know that a 9 rupee call turning to 900 and something like that, and hence that applicability that hold on to a monthly option uh, buying strategy
Mm,
or a short strategy. So
mm.
then, how to like control the appetite or the stop loss? I understood the exit strategy if you get your money doubled or if any of the moving averages or the Bollinger Band is hit, you exit, or the RMI indicator is saying you exit. But when there is a lot of volatility, then how do you determine the stop loss, or how do you then take a trade basis on the options
No, so
trading?
it's all about the timing, right? One, I don't know if your question is about the ability to hold on to a winning trade or your question is about taking a trade. I am not getting the
Ability to hold on to a trade.
hold on, na.
Yeah.
So this hold on, why it is not coming? Because for a long period of time you are doing weekly options.
Yes.
Yeah. So it is this what has happened is that your brain has been fogged by doing weekly, that even though you buy monthly,
Hmm.
that weekly basis पे premium उड़ जाता है. So that is
Right.
draining you from being able to hold on to a month which doesn't actually behave in the same way.
Okay. Understood.
It's just very similar to intraday traders coming to do positional trade. I'll tell you, in
Right.
my 2 decades of hiring, even at Sharekhan, I've hired so many analysts.
Hmm.
If they came from an intraday trading background, I couldn't train them only.
Understood.
Till today, nobody who had an intraday trading background came to me and I could teach him Elliott Wave analysis. They all failed.
Right.
Because
Right.
your mindset is so this कि वो 2 बार में भाग जाता है. तो how do you stick to even a view? When I say
Exactly.
you look at the weekly wave count, it is saying it is going up. So
Right.
then on the daily time frame, it should be the uptrend. And वो hourly में भाग रहा है.
Right.
So that
This is
psychology is very, very hard to overcome, but you'll have to do it. It's only because of your exposure to weekly for a long time.
okay.
Maybe you take a break. One solution is take a break for some time, because when you continue immediately switching, now brain is
Yeah.
still there. Take a break. Don't do any trading for some time, and then come
Right.
back and only do monthly. Stop
Right.
thinking then about what you did before. You'll have to forget what you did before.
Right.
Otherwise, it will always play on your mind.
Yes. Oh, thank you so much, sir.
Yeah.
Okay, let's move on towards the next question. Shivanand Kumar, sir, if you could please unmute and ask the question.
Hey Rohit, thank you for an insightful session. I was hearing you yesterday as well. So I was not able to ask my question yesterday, but I'll ask it today. Uh, so if you go to the swing indicator, right, I think
Yeah.
the last couple of weeks is a very classic example of a lower low kind of a thing on the charts. Now, somebody who's looking at this chart at 23,151 with the swing indicator,
Hmm.
how do you decide when to again sell? Because the longer term trend is sell,
So I
but the
gave the
market.
answer yesterday also, and I'm giving it, I gave it today sometime back, maybe you didn't hear it, is that in this scenario, when you're making a series of very fast lower tops, every time you get the swing coming up to at least 7, maybe 60, 70, 70 ideally, it happened actually intraday. If you are watching the market here, it had gone up to 70. At the end of the day, market came down. That is a different thing. Okay, so when it gets into that zone of, higher up here, it may not go till the red line because it's very fast. And at that time, it is probably not crossing, the 40 or 50 hour average. That's where then you wait for the early RMI to give you a sell signal. Simple as that.
Got it.
Because here you can only trade the early RMI. That's what I just explained. You look at the early RMI over here. It just kept going into sell again and again after coming back to zero. When we look at the Nifty hourly here. Came to zero, gave another sell signal. Came to zero, gave another sell signal. The only thing I'm watching there is that, yes, when it came to zero, did the swing go back to a 50, 60? So that's just like RSI, right? We say na RSI oversold tha. But over 30 ka RSI, jab 35 ho jata hai, we say there's a lot of room now for it to go down again. The same way, the swing has come back to 70 and now you're getting a sell signal. So now there's a lot of room for it to go back from 70 to 10. So in a fast moving market, yeah, this will be the scenario. Otherwise, you should usually get the 80 plus readings as we, were getting earlier.
Okay, so I think this was the question. Let's move on towards the next question. Prodopita Roy, ma'am, if you could ask your question also over here, I'll just unmute.
Hello, sir.
Hi.
So I've been following your YouTube channels and I've already subscribed to the Insider Club thing. Sir, I'm very new to this. So if I purchase this pack, how would I be guided?
Well, we don't give you a relationship manager.
No, that's fine. I mean,
When you
that
say
is
how you will be
absolutely
guided,
okay.
now you're already part of Insiders. So guided is through the what we did like yesterday, but that is once in a while. But I do the weekend with Indiacharts every week for the broader guidance. And then every day I'm writing continuously with a dozen posts. I mean, I don't know what more guidance do you want beyond that?
No, so that I've already tracked. I'm absolutely. It's just that I am very new to all these indicators and stuff like that.
Yeah.
So you think I will be able to, no, once this thing, I will be able to do it on my
So
own?
of course, that is the point, that only when you will practice will you get confidence. So what you're talking about is when can I confidently do it on my own? The answer is
Correct.
with some practice. Of course, sticking to the rules, pay attention to the rules that I'm giving over here, and then practice it. And if you're doing options trading, practice with a limited capital so that you're sure what you're doing. You don't want to be hit by something and then realize, oh, this was a mistake. But if you purely follow it, it is supposed to work.
Okay, sir. Thank you, sir. And it was a lovely session. Nice talking to you.
Thank you.
Okay, thank you so much, ma'am. Now moving on towards the next question. Abhijit Ghosh, sir, if you could also ask your question.
Rohit, am I audible?
Yeah.
Actually, first of all, allow me to convey my heartfelt thanks to you. And in fact, 2021, I took a decision to take the mentorship class. That was the best decision I have taken in the stock market. And I'm laughing all the way to the bank, courtesy you. And there is one thing that I want to ask. This your RMI indicator that I am using.
Yeah.
But the amplitude part, can you say that, can I deduce from it seeing the amplitude from the past, the current amplitude is high. So the trend is more strong.
It's a good question. It's a very good question. Uh, so there in technicals we say there are we put indicators into time frames. I'll try to just open the Nifty chart with RMI so that on Metastock I'm doing it so that I can show you a longer time period. Just give me a second. So see, there are two types of indicators in technical analysis. We say range bound and non-range bound. Okay, the meaning of range bound is like RSI swing, which is 0 and 100. The reason I like indicators which are non-range bound like RMI is that they don't have any level or amplitude fixed onto them. So if a trend is strong, they can keep going up, up, up. However, where your question is relevant is that sometimes during a certain phase in the market, the amplitude does have a range. So if you take this particular period here in between, you will find that the RMI is always topping out, at the top end of this range, closer to around so much, and bottoming out at the bottom, I mean, at a certain lower range. Okay, but that is only true during one bull market or one bear market. It will have a certain amplitude. So within that, you can make a judgment. Say, for example, you go back here 2015, 16, 17, you generally find it, yeah, in this range only, in fact, even all the way back here, that all the tops are within the same range, right? From year to year to year to year. But when you had this COVID rally, it broke out of that range. Very strong move. So you can make a judgment of amplitude within a trend and existing. So within this trend, you can say, okay, this is the amplitude. But it is not fixed. Now, in a bear market, the tendency is this will go much lower and it will have an amplitude down here. It will develop a range somewhere at the lower end. We can see an example of that if we actually go back to 2008. So here, now of course, it didn't even come back to zero here many times, but you see it was in this, throughout this 2008 bear market, this was the amplitude, or throughout Y2K bubble, it was in this kind of a range down here. So every time it came down to so much, you're sort of near the bottom of that range. But there is no particular range. I mean, the whole idea of this indicator is not to have a range which is consistent. Am I getting your answering your question?
I think yes, sir. We all could hear you perfectly.
Yeah, no, he's not replying, so I am not able to know whether he got, I mean, he got the answer he wanted or not. There's no, I think his voice is gone.
Yes.
Okay, no
Hopefully,
problem.
okay. Let's just take one last question as we are in time crunch. So, Arvind Lele, sir, if you could just ask your question. Okay, we'll move on towards the next participant. Virendra Rathod, sir, if you could ask your question.
Uh, Hi, sir.
Right.
Actually, I have been using your Strike platform, and it has worked very well for me for last 2 years. I just wanted to know, this sentiment indicator that is not showing into my, I mean, the Strike platform. What could be the reason, actually? I don't know.
Sentiment indicators are not showing.
Yeah, it is only showing me the price scanners, volume delivery scanners, technical RMI, doubtnet scanners, and seasonality scanners. That's all.
No, that is scanners. Sentiment indicators is a different tab.
Oh, okay.
So I just showed it now on the left-hand side here. You see here sentiment indicators.
Ah,
What you're talking of is scanners. This is this.
okay.
So go down here, you'll find sentiment and diffusion. These are the two. These are where
Oh,
you'll find all of these indicators.
okay, okay. Got your point. Thank you. Thank you, sir. Just one last question. I mean, are there any enhancement? I mean, this is an off-track question. Any enhancement in the RRG also? coming up?
Yeah, there is. I can't define it exactly, but there is to include, multi different watch lists or, I think couple of things are there in the pipeline. Yeah.
Okay. Thank you so much. Right. Yeah.
Okay. Thank you, sir. Only, sir, one last question. I have gotten this message. So hopefully he was trying to ask a question since yesterday. So Kirti Vasan Rajgopalan, if you could please ask your question, that would be the last question of this session.
Thank you for the opportunity, Sakshi. Good morning, Mr. Rohit. Thank you for the opportunity. First question that I have is this RMA that you have devised, does it factor the VIX into it actually? Because when there are huge volatilities, is there a bit of caution that we should have when we look at RMA, or it is already factored into it?
I didn't get your question.
And when there are huge volatilities in the market, currently, we are in a bear market and there is huge volatility.
But volatility and momentum are highly correlated items.
Okay.
So RMI's purpose is that it goes up as long, it stays in trend as long as the trend is there.
Okay.
So if trend is large, it will still get captured like it is right now. RMI has been sell for 1 month.
Correct. No, I just wanted to check that. That's all.
Yeah. So no, but I'm not even getting the question. Volatility, the point is that can I capture a trend? If it gives me a sell signal and falls 3,000 points, will it give me buy signals every day? Then that's a problem. The indicator is an issue. So the problem is not that. The problem is, did I anticipate volatility, which is a completely different question, has nothing to do with RMI. RMI will keep giving you buy sell signals. Then it is our ability to take that signal and then ride it. That is why I emphasized the cycle, the exit, because if you get out early, you will not capture the whole move. So that's really got to do with execution. It has nothing to do with the indicator.
Okay, got it. Yeah, because sometimes indicators don't capture the extremes. So I just wanted to understand from that perspective.
No, they don't, but that is why I gave the methodology right at the beginning. That you use an average or a trend line along with the indicator to capture the extremes.
Okay.
The indicator will give you some false signals, positive divergences at the end, but if the price is not reversed, you hold on. That is how you capture the extremes.
Oh, okay. Got it. Thank you, sir. Thank you for the opportunity. Thank you, Sakshi, for taking this question. Thank you.
Thank you. So these will be all the questions. Once again, I just got few questions, like the offer was not very visible, so I'll just share my screen, and everyone who did not get a chance to, I'll just explain it once again. So this is an exclusive offer for all the participants over here. You get access to Insiders Club Research Advisory plus Strike Analytics in one powerful combo. For 6 months Strike plus 6 months India charts, you'll only be getting for 9,999. So everyone who did not get a chance to maybe have a look at the offer. So this is the particular offer. Both the platforms you are getting for 6 months for 9,999 only. So you can right now go and check it, or you can just right now pay for it as well. Hopefully everyone has gotten the offer or taken a photo of this particular thing. There is also a link in the chat box. If you are not being able to scan this QR code, you can click on that link as well. So I'll just stop the screening over here. I think, sir, it was an insightful session and everyone has asked their questions as well. And hopefully, thank you all for joining as well. And it was an insightful session for every one of us. We got to know all the nitty-gritties of RMI as well. So thank you everyone for joining. Thank you so much, Rohit sir, as well. Thank you, everyone.